G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please sure check out my links below, including exchanges I use and social media content that I post. All right, let's go. So, welcome to another video. Done some rejigging. I've got a new laptop now. Got rid of my Mac Mini I had, which wasn't sort of cutting it. It was, wasn't keeping up with the memory side of things, and we'd have multiple tabs open, and the session would freeze and whatnot. And yeah, so that one machine's retired, and now I've got a new laptop, more storage, better RAM, better processors and whatnot. And I actually changed the software I'm using now. So I was using OBS, and now I'm using a different software, Prism, I think it's called. So yeah, should be good. Hopefully things go smoothly now, and give you the highest quality videos I possibly can, and I'm not pulling my hair out trying to figure out and diagnose issues and spend too much time stuffing around. So we're here, we're back, and make another great video for you guys. So yeah, let's get into it, shall we? All right, so first up, we have Vanguard just gave crypto access to its entire $11 trillion portfolio. Vanguard, the firm managing $11 trillion and serving 50+ million investors, has officially reserved its stance and will allow clients to trade Bitcoin, Ethereum, XRP, and Solana ETFs starting today. Okay, so this was tweeted today. Good. Okay, this morning. All right. This is the same Vanguard that spent years saying crypto does not belong in the long-term portfolio, and the same Vanguard that made one thing very clear in early 2024. Investors will not get access to Bitcoin and crypto through us. But starting today, Vanguard has opened the door for all clients, including institutions, to buy regulated spot crypto ETFs from BlackRock, Fidelity, Grayscale, VanEck, Bitwise, and others. The biggest catalyst is a new CEO, Salim Ramji, who previously helped launch BlackRock's ETF, IBIT, and oversaw the entire iShares ecosystem. His arrival changed everything inside Vanguard. That's interesting, but let's talk about what it actually means for the markets. Vanguard controls $11 trillion, even 0.5% of that is massive. If just 0.5% of Vanguard's assets flow into crypto ETFs, a very small number for the firm of the size, 0.5% of $11 trillion is $55 billion. Okay, it's $55 billion flowing from into Bitcoin and crypto ETFs would be bigger than the flows we saw during the entire first year of the 2024 ETF cycle. Wow, that's massive, guys. It's huge. So it's being conservative, 0.5% of the big asset stockpile they've got. Huge. It's very, very doable, I think, in my opinion. That's very realistic. And to see that, it'll be more than what 2024 saw in general, all up the whole year in the ETFs, is very, very, very promising. Okay, so they've flipped the tune, Vanguard, and they're on board with all the other big boys. So, yep. And here's what makes announcements more bullish. Crypto ETFs have now been tested for 2 years. Okay, BlackRock's IBIT has grown to $80+ billion. Ethereum ETFs are scaling quickly. XRP and Solana ETFs just launched. Regulation's clear. I can go on and on. There's more stuff. JP Morgan and Morgan Stanley, it's our tied to Bitcoin now. Vanguard giving access to Bitcoin crypto ETFs is one of the biggest institutional signals we've ever seen in ETF approvals. As tens of millions of investors gain access, institutional accounts can now get exposure for Vanguard directly. Petty pressure forces traditional holdouts to follow next wave ETF demand, gets much bigger. Even total allocation for Vanguard becomes billions in inflows. Bitcoin and crypto gain long-term legitimacy inside the largest portfolios in the world. Okay, so let's get a little picture here. How it started. Vanguard won't offer spot Bitcoin ETFs, saying high volatility is bad for generating long-term returns. This is back in early 2024. Now, how's it going? Vanguard clients can trade funds holding crypto like Bitcoin, XP, Solana starting this week. Bloomberg. Okay, so different authors, of course, but it's just interesting to see what they've come around to it finally, because everyone else is in. doing, offering these products, ETPs, Bitcoin, Ethereum, and then the altcoin ones are coming out this year. They're getting left behind, and they're realizing how much money they're making. So they've finally stepping up to the plate and offering their services for people with their accounts, Vanguard accounts and whatnot, to get access to crypto. So how good's that? Okay, on to the Fear and Greed Index. So Fear and Greed Index now, it's at 28. Okay, so we are out of extreme fear and in fear. So yesterday, extremely fearful. Okay, 23, and last week was 15. 42 fearful last month. And this is a timeline of fear and greed. And we go back a bit longer so you can see a bit more zoomed out perspective. And we saw a low at 10 on November the 15th. Okay, so it was your low. And we got 10 again next day. And then we got sort of choppiness around the early teens here. And we sort of made higher lows, higher highs. Now we're departing out of this trough here. And hopefully we start breaking these highs now. Now, this is not price action. This is fear and greed, but it follows price, okay? And sometimes you get divergence. So see here, 5th of October, 9th of October. Okay. Now there's your highs there, in the 70s. You go back to a year ago, all right? Even though Bitcoin made a new all-time high here, the fear and greed index was actually higher back in July. It was 80 nearly, okay, 80 odd. And once you lower it, mid-70s, it's been going ever lower ever since. Okay, so it's been diverging, and now it's obviously following price going down. Prior to that, we had this sort of double bottom here sort of thing. So you had this late February low at 10 that we saw here, okay, mid-November. And we got a higher low, 18 in the 9th of April, all right. And Bitcoin's actually made a lower low. So this diverged and then went high. So interesting to see fear and greed. Shows you interesting diverging signals, and diverged here, of course, I just told you. But now we're not diverging, they're both going up together. And yeah, price and fear and greed. Hopefully going parabolic now. If not, then we could see more consolidation like this period here. It took a while for it to actually take off, you know what I mean? Find a low and then consolidate higher. Obviously go back even further, and you can see times where it's taken, periods of from, you got this low here in May and then going into July. So there's a 2-month period of just sideways action, yeah? So we've only just gotten out of this trough here. We'll see what happens. It'll take some time. So you can see this, prolonged. You can see wicks down here. Look, it got to 10. We did obviously down in April, and in this period here, oops, there it is, 17 in August 6, 2024. So anyway, we'll see what happens and see how that progresses. Hopefully we get some more upside and the sentiment changes to a more neutral stance and then a greedy stance. On to OTC indicator dashboard. So we've got summary risk, which makes up price, on-chain and social metrics. And we're sitting at 0.205. Okay, price metrics are 0.229 and 0.387 for on-chain. And we've got our social metrics at 0 still. So haven't moved at all. Or have, but not much. It's been pretty grim and disappointing for seeing social interest come back. But it's really interesting why it hasn't, especially with Bitcoin performing the way it has performed. I believe it's to do with the altcoin market. It really hasn't caught up. That's what the problem is, and we haven't seen them come back yet. Okay, so if you go back to price bricks here, you got Bitcoin price itself 0.43. Okay, and the crypto market cap is at 0.2. So that's probably giving us a good reason why we're not getting much, retail interest. Okay, and the risk proving that is because of the price risk is pretty low, showing that a lot of people are very, very deterred. The current corridor, this indicator is very, very interesting. Actually, we'll click into it, have a look at it. I had a look at this today, and I had a really interesting realization of where we're at with this indicator. So in the bear markets, okay, you can see if I zoom in here, we touch it, all right, we bounce off this green one, and that's a low, and then we go higher from there. Okay, as you can see here, boom.
Next bear market, we didn't touch it around 2015. We got really close, okay, and went higher from there. And away we go. So it's not like perfect for calling bottoms, but saying how low we got really close to the lower band. And this 2018 period, we got pretty low, close to it, got a bounce, and ultimately went lower, of course, because we're in the middle of a bear market there. And we actually got down to it and touched it. All right, December 2018, and then we got higher, and that was it. Touched it and went higher. So it was a signal to go long and go bullish and have a nice mid-cycle push, Then we came, obviously, when the pandemic hits, we went way below it, okay? And boom, short-lived, we exploded from there, going into the 21 cycle. Now, it came back again during the summer slowdown in 2021, got really close to it, making these lows right around the band, and then boom, we shot up higher. As you can see there, and made a high, new all-time high, and that was it for the cycle, 2021. And now the bear market. Okay, before we get to the start of the bear market, we got close here in January, and we had a rally, okay? As you can see there, came back to it again, and we fell drastically below this lower band in June, basically June. And then we found a low, okay, around here, and then we shot up higher, all right? It was short-lived, of course, before we went even lower again in price. All right, and this time it didn't get very close, so it's hard to tell using this indicator, but we got really close. It was in, from June to November. It was in basically 5 months, okay, within the bottom. So it wasn't too far off. Now, where do we find ourselves? This is an important thing to mention. We literally touched it there. Like you couldn't get any closer than that in November 21st, 22nd. And I think we're forming a low, a base go higher. So this indicator is suggesting to me, given the direction of the band's going higher too, going up, showing we're still in a bull market, not seeing any downward momentum, still pointing upwards, okay? We should see some upwards price action momentum. Okay, to see a nice push off this band to the upside. Hopefully, fingers crossed, guys. I mean, this is a really interesting indicator. It gets you lows in the bear market, and we're still in the post-halving year. But nevertheless, anything's possible. Like I showed you in 2018, we got really close, all right, bounced, and then we went lower. So we could go into a bear market. I'm not saying it's the be or end all, but yeah, you got to stay optimistic, okay? This is showing oversold conditions. So that is that one there. On the next chart, stablecoin supply ratio. Okay, this is another great chart, very similar. It's got those Bollinger Bands, like the channels, the lower and upper bands, a bit like the other one I was showing, the Cohen corridor. Okay, you got your lower and upper bands, similar sort of just things. So the red is the stablecoin supply ratio, and the orange is Bitcoin price. You can see, I'll zoom in a bit. Stablecoin supply ratio goes below it. Bitcoin finds a low, comes back down again. Bitcoin finds another low, and then we shot up and go higher from there. So that was your low. Okay, back in 2018, and boom, there we go. Came again in this period in 2019, had a low. Bitcoin went higher, nearly touched it, bounced off it. Okay, and ultimately found a low, and then it rallied with the stablecoin supply ratio, and they both came down to the pandemic crash. All right, then we came up above it, broke back above the lower band, like it did, and then going back down again, and went back up again, as you can see there, and Bitcoin found a low. All right, and boom, came back again in this period in October, September time frame, and then we shot back up again, and then here we go. There's the highs. Happened again, mid-summer time in post-halving year correction. Went below it, went above it, you can see there, and then both went up. Okay, went below it, went above it, had a little rally there, not much. Came down again, went below it, went above it, there's your low. Okay, now didn't really get to it until all the way, so it's in 2022, June, July. Didn't touch it until 2024, so 2 years later. Okay, guys. Touched it there, as you can see. All right, went below, went above it. There's your low. Boom, went higher. Into 2025, January, came back down. Didn't get to it here. So I'll zoom into this whole area. We didn't get to the lower band. But we got close and bounced, and obviously they both went higher. Now we find ourselves below the lower band, and it looks to be pushing above this. Okay, so we're just on the verge of breaking back out of this lower band. Will this be a durable break above for the stablecoin supply ratio to mark a low in Bitcoin and go higher? Quick question mark there. Yeah, I don't know. Tell me what you think in the comments section. What you think? Do you think this is a low? Or do you reckon we can see this metric keep falling? It'll be a fake out. Like I said, we do get fake outs. All right, so it's not the ordinary. But yeah, that's that one. Onto price now. So onto the price. We're getting a nice push here from the lows. A couple of weeks on the Friday time frame. And yeah, it's looking, it's obviously they're below the moving averages, the 50 week and the 20 week. We're durably below these. So showing a bit of weakness compared to April and, September time frame of 2024. So we're not as strong as these periods. And even 2023, September, sort of above the 50 week. We've broken below it. So it shows a bit of weakness. All right. But it is what it is. It is what it is. And Bitcoin risk currently sitting at 43. Okay. So the risk is neutral-ish. We had a lower reading down here, especially here. I think it was yesterday. It was 37 or so. So interesting. So getting very, very undervalued there. Let's look at the MACD now. So the MACD is crossing right as we speak. So getting a bullish MACD cross on the 3-hour time frame as getting a pump price. So it looks nice. You get these bullish crosses here. I'll give you a quick rundown. Here's your cross, and then eventually went lower and then pushed higher. So there's your bullish confirmation. And it happened again back in 2024. We're losing it. July, we already had these highs, rolled over, made a new low. It took a bit longer, and eventually it took off. So I'm not saying it's going to go up straight away and we're going to make all-time highs. We're bullish. Old seasons here. No, you could see some more consolidation before we go higher. I showed here, went down and then went higher. This went down and then went higher. Okay, so both instances, they went down and then higher. And they were at the bull market support band at this stage. You can see there, both of these times we crossed. We're way below that now. So we could see some upside, okay, to get to these moving averages. I do see a correction and then another continuation to the upside. So some choppiness, okay? And back in 2023, the September time frame, we had a cross below it too. The oversold, bullish, and there's your low, and bam. This one didn't make it a new low. It's actually continue higher. You can go back even further, have a look at it. Back in 2021. I'm not going to show all the examples, but there's your went lower first and then went higher. Okay. This time here in February, we crossed bullish. Okay. Even before that, out there, we had a bullish pump, came back down, and then went higher. So there's an interesting pattern. It usually comes down and then goes higher. This one was a little bit different. 2023, it did go down slightly and went higher. Okay, this went down, went higher, down higher. We could see a pump. Even if this could fade right now as we cross bullish and do something like this. Who knows how long it's there for? Make another bottom and then go higher. That'd be fantastic. And the MACD was you cross and then make a higher low. You know what I mean? To match up with these, in line with this, it's got to line up with that. That'd be nice if you get that. That'd be fantastic. But we'll see what happens. That's the 3-day time frame for Bitcoin. And one more thing I want to show you guys is the risk metric is very, very low. We are sort of curling up now. I'll just give you full screen mode. We're curling up. We're at 16 out. We were at even just yesterday, I think it was. It was pretty much yesterday. We were at 14 or so, and as low as 13. And we're curling up, which is nice to see. And this is the lowest levels we've seen for the risk metric since the bear market low in 2022. This period here, got the same risk readings here. So we're very oversold. Okay, that's what I'm trying to say there. We've had a big correction. The correction has been, it's 36%, I believe. 36%. So really nasty correction so far. It's the deepest correction this cycle. That was 30. Was this one 32 or something? Hang on a sec. 32, yes, it was. And this is 33, a bit more. 33. Okay, 33, and this is 36. All right, so you can see, even though the market cap's gone up, sort of thing, it's had a more volatile move. So it's not prone to volatility. Everything is. Anyway, that's that one. Another thing I wanted to sort of note is I get rid of these moving averages and stuff. But the Fibonacci tool, go from the low to the high. And there it is there. I can drag it across to make sure it's lined up. And it is. And you can see here, there we are. Sorry, what am I doing? The April low. Start from the April low to the high in October. And we get a touch at the 0.886 to 80,300. Okay, and we've had a rejection here. And we are struggling to get above the golden pocket. So this is a resistance level. Okay, as you can see here, bit of a cluster here. And there's a low here as well. So if you draw a support level, all right, there's your support level, yellow on yellow. And we have plenty of touches here. This is resistance for Bitcoin. It has to break through this. All right, so we are struggling at the moment. If we can break through, fantastic. Okay, we can target next level at the 0.5, 100K, come back down and then try again, you know. So 100K is the next level, which is here. As you can see, touch, a touch, two touches, a little touch there. My drawing skills are horrible. Sort of rejection here. Some rejections, minor rejections here and here. So getting some clusters, okay. I see this breakdown period here. So this will be your resistance level above it, 100K. It's a nice round number anyway that we all know and love. And remember, not so long ago, we're back in early this month, we're actually at 100K. Not too long ago, but hopefully we can regain that pretty shortly. Okay, if we break through this Fibonacci 6.8 to 65 Fibonacci golden pocket zone. So that is what you want to see of Bitcoin. And 786 was, you don't want to see it break down now. Head down to 0.703, 786, especially go back down to the red, either double bottom here. We don't want to see it break, okay, because we head down to 1, which is this low made in April. That'll show weakness. We might get a reverse bounce here, but ultimately it'll end up lower. It'll be a weak bounce. So you want to see a nice strong move now, retest and break through to head to all-time highs. Back here at 126,000. All right, so that's Bitcoin analysis. And we'll go to Ethereum. I'll start with the Fibonacci since we're fresh hot analysing Bitcoin of it. So there's your low in April, of course. Your high in August. So it was high in August set for Bitcoin, topped in October. And drag it across. And we see what the golden pocket. So there's your retracement there. Bit different to Bitcoin. Bitcoin had a bit of a deep retracement. ETH, a bit stronger retracement. Even though ETH actually declined a lot more than Bitcoin has. So ETH dropped 47%, Bitcoin dropped 36%. So deeper correction in terms of percentage-wise, but Fibonacci-wise, it actually has, say, a bit more strength. What we'll see, a resistance level is basically 0.5 Fib, okay, not far off it now. You can sort of draw the parallel. It's not far off where we are now. Currently price is, as you can see, there is a cluster here, okay, the cluster here, a wick here, sort of thing, and that's about it really. A wick here, okay, something here. So we're sort of near this resistance zone here. I want to see it break, like Bitcoin, okay, head to its next Fibonacci zone at 0.382, which is at 3,600. Then a wick here and here, okay, here, and a cluster here, of course. Break above that, and then, all-time highs from there. That'd be fantastic. If I don't see strength here, we could see it retrace a bit more, 0.703, and then 0.786 would be my absolute line in the sand. But it's not going to be a strong bounce, okay? It's going to be a weak bounce, probably to the 0.236, a lower high compared to this one, and then go lower, all right? So I don't want to see this happen. This is a no-go for me. This is bear market confirmed. Doesn't mean we can get a bounce, but you're only getting out on this bounce, okay? Because it won't go much higher than that. It'll fake a lot of people out. It'll trap people in and then send it back lower. And it should go lower than this, okay? So just keep that in mind. I want to see some strength now. Get above the 0.5 and then go higher. Messy, I know. Now on to the oscillators. So we're getting cross as we speak in the 3-day time frame. MACD, same as Bitcoin. So bullish. And you've got one here, obviously. Went lower first before going higher. So similar to Bitcoin, okay? It's a fake out. We had a cross here. This is a bit different though. Actually pumped in September 24. Made a higher low, then went higher. So we did see some chop, but it wasn't as low as this point, and it crossed. And really, next point was here, okay, in September 2023. And as you can see there, we did see a pump, and a lower low, and then higher. And before that, we can go back even further. In July 2022, there's your low, and then just boom, just took off straight away. Wasn't waiting at all for the bulls. And then February 2022, actually at its highs, rolled over first and then pumped. Okay. And I'll show you one more time. Yeah, 2021, just went crazy, absolutely parabolic there. So yeah, some good times straight away. Stagnated down and up straight away, basically. Straight away, stagnated. So we could see some stagnation first, or a pump higher. Okay, it really depends because these things can diverge too. So you can see divergence can play out. I'll just show you quickly example. So you got this low, okay, it's macro low, this low, and this low here was higher than this low. So that was higher. I could just give it an arrow. This was going higher, and then this arrow, this is obviously going lower, and you can see price down here, and that was divergence, and it shot up to the upside. So you get a huge divergence here, and those things can play out. So sometimes there's a reason behind these moves, even just crossed on its own. You look back to the previous MACD cross to see where we were, to get an understanding where we're heading. This is a bit different. We are currently, I'm just plotting this right now. So even though we've got this cross here, okay, price is all the way down here, okay? There's a low, and we actually get even low reading on the MACD. So it's gone lower than this point, okay? If you can see there. It's going downward, obviously. A notable thing is this is higher than this point, okay? And look at this. Look at this. Higher low, lower low. This is a reverse of divergence. It's called hidden divergence. So this is extremely bullish, seeing lower readings in the MACD and high readings in price. If you go to the weekly time frame, it's a bit different, unfortunately. So we're getting a higher low reading. This is higher than this one. So it's just following price. But on the 3-day time frame, it is not. It is showing hidden divergence. So very, very interesting. I do expect this to end up in a nice pump here. I don't know how much of a crazy move it's going to get, but you might see some chop first before going higher. But ultimately, that's the direction that this is telling us we're heading in, because this divergence playing out, hidden divergence. So very, very interesting, guys. I didn't mention moving averages, but we are below them, okay? Below the 50-week and below the 20-week, same as Bitcoin. We are sort of resistance level facing the 50-week at the moment. So you break below that, break above it, and then break above this major resistance level, okay? Which if we bring up the Fibonacci's again, from low to high, it's around the 0.382, which I mentioned before. So 0.382, same as 0.5 is at your 50-week, and then, yeah, you want to see it break above and then boom, higher from there. So that's what you want to see. Okay, guys. That's pretty well it, I think, for the video. I don't want to go into much more detail than that. So thank you. So guys, thanks for tuning in, watching the video. It's been a while, I know. But hopefully I made up for it. Made you some interesting content and continue to make more with my more reliable gear that I've got now. So my software set up, your computer, everything else, audio, hopefully it's sounding better. Got some new plugins. So a nice voice removal, like a background sound removal. So it should be less hissy noises and all that. And yeah, it's just about time, it's just, everyone deserves good gear. When you're making videos, you've got to have it. You can't cheap out too much because it affects your quality, and people do complain about it. It comes across on YouTube. Okay, so I'm recording in 4K, and I'll probably downscale this one, but that's I've got the luxury of doing that because I've got good quality recording now. So I am stoked. I don't seem like it, but I am, and I'm just relieved, and hope you guys can see that and appreciate that. So it's good. So we covered a range of things today. Your fear and greed, Twitter, Vanguard, ETF, which is nice and bullish, awesome. Crypto, about time. So it's a very, very good, I think, telling sign that there's some big things coming. So I don't think we're at the start of our market. I think we're starting to turn around to go to a bull market, getting Vanguard's $11 trillion in assets and getting just a sliver of that, 0.5% of that, which is $55 billion. It'll be enough. That's all you need, okay, to get a influx, which is just as large as the ETF flows combined in 2024 for Bitcoin. So that is very, very interesting facts I found out there. Also looked at stablecoin supply ratio, seeing that we're just about to break out the lower Bollinger Band and go higher. Hopefully we do that, not a fake out. Looking at the current corridor, seeing we're very close to the low of that lower band, and historically it's lined up with bear market lows. So so bullish there. What else? Bitcoin ETH price action and Fibonacci's moving averages, MACDs, you name it, we covered it. And go back and watch it again. So awesome. So if you enjoyed this video, please smash the like, comment your thoughts below. Sure to subscribe. Make sure to subscribe to stay updated. Sure to check out the links below. And I'll catch you next one. Cheers.